Welcome, welcome, and welcome to Charts Focus 1, where we teach you how to work hard and trade smart. My name is Andrew, the founder of CFO, and let's get right into what the title of this video says. So before I truly begin, let me give you guys a rough summary of what has occurred the past 2 to 3 months. And so if you guys have been following me on X or Twitter, whatever you guys want to call it, or Instagram, or even YouTube, you guys should remember what I said the past 2 to 3 months ago. So I've hammered onto you guys that quarter 3 of this fiscal year was going to be very volatile and one of the worst performing quarters and months of this fiscal year. And guess what? August took the crown for being one of the most volatile. As you guys can clearly see, we had a pullback from this year's highs at 459.44, and then we pivoted off away, making a nice low pivot point at 433.01, and then we came right back up and hit this second pivot high point, and then came right back down heading into September. And September took the crown for being one of the worst performing months out of the 3 months in quarter 3. Now, if you guys truly remember, I told you all this. At the end of August, I said the very first day of September and the very first week of September is going to be a pullback and it's going to be a negative week. And guess what? The next day, the very first day of September, right here, we ended up with a nice gap up, but then we ended up pulling back for the most of this trading day. And even though we did end up on a positive percentage, we continued to pull back for the rest of the week, and ultimately we ended up being negative. Now, with that in mind, if you guys remember, just last week, at the end of September, I said exactly this. I am expecting the first day of October to be green and the first week of October being positive. Okay, so if you take a look here, we ended up bouncing on the first day of October, which was this Monday, even though we ended up being negative on the day, a negative percentage. But today, on Friday, we made a higher high, a new weekly high. So if you go on the weekly time frame, and we ended up being positive on the week, 0.48% positive. And for the fact that we ended up with the nice with a nice hammer candlestick, which is inherently bullish, gives me hope that we can continue to run up back to the upside. Now, am I some sort of psychic? Do I know the future? Do I have this magic ball that I'm looking into, a crystal ball? No. Everything that I'm basing off of so far since, late 2022 into this year is from seasonality trends and market internals. So the seasonality trends for this year has been absolutely on point. And we've been in a nice bull market since, the lows of this year that were achieved on January of this year. And so far, using seasonality trends and even market internals as well, we've had a textbook correction from the highs of this year at 459.44, nearly a textbook 10% correction. Now, thanks to the seasonality trends and the fact that the market has been following the seasonality trends to a T, let me go right into what you guys are looking at right now on the daily time frame. So back in around, I believe, late August, I drew this price path. Okay. And the reason why I drew this price path was that, well, SPY has started to create a parameter that was set up by these two descending trend lines. One is a resistance level and one is a support level. And if you guys forgot, these two trend lines are created from the weekly macro cup and handle chart pattern. That's right. I've been saying this and telling you guys about this chart pattern for months now. So this rounding base is the cup, and that little flag that you guys saw, or those two descending trend lines that you guys saw, is what makes up the handle part of this macro cup and handle chart pattern. So that means the macro outlook and perspective is inherently bullish. And that's the reason why I continue to stick with my thesis, my current thesis, that by the end of this year, we will have rallied to the upside. And somewhere between mid to late October, we will have the official pivot. All right. Now, I will get a lot more detailed into what I truly think will occur to the market, especially from late October to all the way up into November by the end of this video. So make sure you guys stick around. And also, if you guys aren't subscribed yet, make sure you guys hit that subscribe button down below. And if you guys are enjoying what you're hearing so far, make sure you guys click that like button down below as well. But if you don't want to, you don't have to. And instead, you can leave a comment down below on what you guys think. I always love to listen and read what you guys have to say. Now, with all that in mind, so far, we have come back to sticking to the parameters set up by these two trend lines. How do we know this? Well, I mean, just visually speaking. Today, we ended up right back at this critical previous support level at 429.50. So if you guys remember, this level was created after the fact that we gapped up in early June and we created this micro bull flag. And this was the resistance level on this micro bull flag. So the fact that we have made this into a support level and obviously breaking below it now, we have created a resistance level again at 429.50 can give us more of a reason to break over 429.50 during this inverse run back to the upside and have us ultimately fill in this gap down that we created in the middle of September and ultimately reach 437, which was the previous significant support level that we had before 429.50 was ever reached. Okay? Now, with all that in mind now, okay, I want to give you guys a specific look at the flow of the messages that I sent to my private members. So if you're a public member in the Discord community, you can't see these messages. So make sure you guys pause and take a look at what I'm about to show you. Now, I specifically want to start from last Thursday, so September 28th. Now, there's a reason why I'm starting from September 28th, last Thursday. But before I even tell you guys that reason, I want to give you guys two lessons that are ingrained from my showing of this flow of messages that I'm about to show you guys. So the number one lesson is less is more, quality over quantity. You guys have heard that cliche statement, but do you guys truly know and understand where to implement that statement? Well, we'll see. And then lesson number two, your thesis can be right, but the timing with the market can be wrong. Okay, you guys have probably heard that cliche statement as well. And I'll show you guys where to implement that as well too. Now, let's go back to last Thursday. So last Thursday, I gave this message to my private members. One of the most important positions that I'm currently holding and will be the most important position for the rest of this year. UPRO, which is the ticker, high risk position trade, 45 strike call contracts that expire on January 19th, 2024. And so I got in specifically at $2.45 per contract. Now, obviously, you guys can pause and take a look at what else we took here and what happened, and which I highly recommend you guys to do. So, I took Piton, Amazon, which is a great day trade, Chewy, which is also a great swing trade that we took a week before that, and Shop as well. Okay, but all these trades, other trades don't matter, right? Like PFE, which is another great swing trade that I'm still currently holding. Disney as well. Okay, Disney was another great swing trade that had potential, including Adobe as well. But let me continue to scroll down. Now, shout out to my other CFO Pro trader, Chef. Great trader. Okay. So now, on this specific day, okay, right around, I believe right around here, okay, so I said all respective stop losses hit for Shop, this, and Adobe. Okay, Shopify, Disney, and Adobe. And this is where I was currently experiencing at this time on October 3rd. So that was Tuesday of this week. Okay, we saw that nice pullback in the markets again, where the Monday bounce did not hold, and the rest of the names that are really connected to the markets also plunged lower. And so this got me thinking, well, since my stop losses have been hit for all these trades, while my other trades that I took that were swing trades or even day trades turned out to be either a break even or with small profits, I felt a little bit queasy. Why? Well, first of all, I've had that UPRO trade. But there's a reason why I took this trade. Okay, even if all my other trades were getting hit with stop losses, right? So I want to make sure that I had one quality trade that I can sit for as long as possible, while my other shorter term swing trades had to be monitored a little bit closer. And that's the reason why I said this. UPRO, wide stop loss, looking to add once this fear subsides and we can get that official pivot. And so for this entire week, I've been adding UPRO. And there was a telltale sign that UPRO was about to have a nice liftoff and confirm my thesis that the first week of October is going to be a nice run up and a great positive week to start off quarter 4. And also, if you guys remember, maybe even 3 to 4 months ago, I've been saying that somewhere between quarter 3 to quarter 4, that transition is going to give us that nice start of that rally into the end of the year, right? So I've added all of my thesis and statements that I've said for the past couple of months, and I put that onto my UPRO position. Now, first of all, if you guys don't know what UPRO is, okay, let me show you. So this is the Pro Shares Ultra Pro S&P 500, right? It's just like SPXL, right? So just think of it like that, right? But basically, it's exactly doing what the S&P 500 is doing. Obviously, the underlying share price is a lot cheaper, like UPRO here and SPXL compared to the S&P 500 or spot. Now, this right here gives us that exact lesson number 1. Less is more, quality over quantity. So as I previously stated, I felt a little bit queasy. I was like, oh my God, if UPRO works out, then I really didn't have a reason to get stopped out of Shop, Disney, and Adobe. But I remembered this. Less is more and quality over quantity. I remembered that initially, UPRO was going to be my quality trade to hold on to. And so I reminded myself of this specific cliche statement, and I integrated that into my mindset earlier this week. Even if I had a bunch of trades like Shop, This, and Adobe getting hit with stop losses, I continued to hold on to UPRO. And like I said before, a couple minutes ago, UPRO contracts, specifically the premiums on those call contracts, stayed at a very tight range. Right? I even told my members this today. And that was one of the few small signs that told me that UPRO, the premiums for calls, were holding, especially the specific contract that I had acquired. And that gave me a little bit of a confidence to trust in that cliche statement. Less is more, quality over quantity. So if the market was really going to do exactly what I said for the start of this week, for the start of quarter 4, for the start of October, I can sleep well knowing that I can at least capture the bulk of the market's move compared to trying to capture every individual name's move. So I was glad that I was able to implement this mindset of less is more, quality over quantity, after getting hit with all these stop losses and feeling queasy from the fact that I was about to maybe, experience FOMO. And I was able to subside those feelings by letting myself know that, hey, I have a quality trade on my hand. And if all these individual names continue to potentially give me stop losses, if I decided to get back into these names after getting hit with those stop losses, again, I didn't. I'll show you guys here. I could still sleep nicely and feel comfortable with the fact that I can still capture the market's gains, not just every individual ticker's names, by having this specific quality position. And so with the fact that the premiums were tight and still ranging, even though UPRO continued to move to the downside, I continued to add on this specific position. And so now let's go right into today. Okay, so now obviously again, I highly recommend you guys to kind of pause the video and look at the flow of my messages and take a look at the specific trades that I got. Okay, and if you go all the way down today, okay, UPRO ended up being 30%. All right, and this is where the second lesson comes in, okay, where your thesis can be correct, but the market timing was wrong. And that's what happened on Tuesday of this week, right? Where we moved down. When I first thought that after Monday's bounce, we can get that nice pivot back up over 429.50 and also regain this descending support trendline that also comes from that macro cup and handle chart pattern. And obviously that didn't happen because again, the market timing was wrong, but my thesis was correct because of what we experienced and what we saw on Friday today. Okay, so again, of course the market can, well, it really could have just completely shat on my thesis and my technical analysis that I've done the past couple of months and what I was expecting for this specific moment at the start of quarter 4, and I could have been completely sidelined by the market. But again, thanks to the fact that I've held my composure with these cliche statements of less is more, quality over quantity, and the fact that my thesis was correct but the market timing was wrong, I was able to hold with a good foundation, with a great, valuable, quality position of UPRO, and I was able to capture this entire market bounce that occurred today. And I was able to leverage more into this specific quality position rather than going all out and getting specific individual names and just grabbing whatever I wanted to get so that I don't feel FOMO. And so instead of doing that, I focused on this specific trade, leveraged in more into this position, and I was prepared for either getting stopped out, but at the same time, I was prepared to rack in the gains from this potential move up higher because I wanted to hold on to my thesis, even if the market timing was wrong. And that is how those two lessons are ingrained into what has occurred for the past week and a half here. Okay, so again, make sure you guys pause the video and see what we did this week. And again, shout out to my CFO Pro Trader, Chef. He had some amazing calls here as well and amazing game plans. Okay, so, you know, again, I really think that the lesson here is that, you know, you need to be confident, right? The market is uncertain. That is 100% true. Okay, but you need to have some sort of trust in yourself and confidence in order to be able to take in some risk. Okay, and so that segues into what I think what the market will do for the next couple of weeks and into November, and maybe even the end of November. So the market has shown aggressiveness this week, okay, especially today with this nice jump in buying volume and this big fat candlestick. All right, we ended up being over 1% for the gains here of today, which is really good, absolutely good on the overall market. So with all of that in mind, okay, this is what I expect for the rest of October and into November. So based on my technical analysis and what I'm projecting using this technical analysis, I expect October to continue to run up higher, fill in this gap here that we created in, I guess, late September or mid to late September, and at least hit this descending resistance trend line. Okay, and this can occur somewhere around next week or even next week, like the end of October and into November. Now, this is the most important part. I believe that we can see a pivot again from this descending resistance trend line. However, in November, I expect us to create a higher low pivot point compared to this low that we created for the month of October so far. Okay, so I expect this week's low, which is at 420.18. Again, that psychological level of 420 has been holding strong so far for this entire year. Okay, it's going to hold, and we can see this being the official low of October, and somewhere in November, maybe around early to mid-November, we can see a higher low point. And from that point forward, we can bounce from that higher low point and officially break out from this descending resistance trend line and have that end of the year rally into the end of December. Okay, now minimum, I expect the market to at least attempt to get back to the 2023 highs of 459.44, at least around that area. And maximum, okay, I expect us to at least hit around 460. Okay, so I'm being very conservative with my minimum and maximum price targets for this end of the year rally. Okay, so do what you want with that information, but that is my current market thesis for the next around 1 to 2 months. Okay, including October here. All right, so that is exactly what I want to tell you guys for this video. Hopefully, it wasn't too long. I believe I'm almost nearing that 30-minute mark. But again, make sure you guys try to integrate those, those cliche statements into your trading strategy. It can really help you, like it did this week for me. And also, don't forget to journal your trades. Write them down, right? I've been doing this for years and it's been helping me get better every single day, every single week, and every single damn month. All right. Okay, so hopefully you guys can learn something from this video. And if you didn't, well, my apologies, but that's on you. But again, if you guys like this video, make sure you guys click that thumbs up down below. It really helps with the YouTube algorithm. And if you guys aren't subscribed yet, why aren't you subscribed? Make sure you guys hit that button as well. And most importantly, make sure you guys hit that notification bell so that you guys know when I have uploaded a new video and when I am live. Thank you guys so much for listening and have a great rest of your night.